it's not what you buy, it's what you pay. And success in investing doesn't come from buying good things, but from buying things well. And if you don't know the difference, you're in the wrong business, literally. So everything you buy should offer some combination of excellence, of quality, and or attractive price. You don't want to buy a great company at a terrible price. You don't want to buy, probably don't want to buy something which is horrible fundamentals at a really low seeming price. It's the trade-off that you're looking for.
I want to talk a little bit about emotion for a second. And you've said that you need to either be unemotional or act like you are. And I wanted to go actually back to a story you talked about before, which is that this 2008, which a lot of people in this audience weren't here. And I think if you weren't there, you might not appreciate how scary that actually was. I mean, you went through the dominoes of all the banks falling. But were you scared when you and Bruce were putting the capital to work? How did you, or if not, how did you keep yourself from being emotional?
Well, first let me say, if you think about the norm, what happens? Things are going well, the economy is performing well, companies are reporting good earnings, stock prices are rising, everybody's optimistic. And the longer this goes on, people become more and more and more positive, and until they buy here. And when they run out of money, then things turn around. Then eventually the economy weakens, then the corporate profits aren't so good, and prices start going down, and people start losing hope. And as this continues, they get more and more depressed and more panicky, and they start fearing further losses until they sell out down here. In other words, they tend to buy more here and sell more here, which is the opposite of what we all should do. My mother said, Howie, buy low, sell high. So emotion is our enemy. Emotion tends to get us to do the wrong thing at the wrong time. And we have to resist that. And one thing I point out is that the influences that affect the crowd and make it do what I just described, those influences are universal. And I feel them too. And you feel them too, and everyone in here. We read the same newspapers. The news is the same for all of us. In order to outperform, by definition, you have to depart from the crowd. You have to hold a different position, and you have to have resolve to do it. And it can't be easy. And I had one of my colleagues came to me in '98. Talking about ancient history, long-term capital had just melted down, and we had the ruble default and the Southeast Asian crisis, and there was a lot of things going wrong. And one of the guys who considers himself to be very thoughtful.
This is that Oaktree, though, right?
Yes, that Oaktree comes to me and he says, "This is it. I think it's all over. I think the financial system's going to melt down. I think he explains to me all these things." And I said, "Great, thank you for sharing that with me. Now go back to your desk and do your job." I said, a battlefield hero is not somebody who's unafraid. It's somebody who's afraid, but he does it anyway. I mean, if you're in scary circumstances, to be unafraid, you kind of have to be a nut. But the key is, can you be afraid and do your job anyway? What I wanted to say is Dave Swenson, who for 35 years ran the endowment at Yale and did a bang-up job. And he wrote a book called Pioneering Portfolio Management, I think it was in '98 or '9. And he said that successful investing requires the adoption of uncomfortably idiosyncratic positions. Everybody has the same influences. Everybody thinks pretty much the same. Everybody anoints the same winners and criticizes the same losers. And obviously, tomorrow's winners are usually found on the pile of today's losers, not on today's pile of today's winners. But to prospect in today's pile of losers, the things that everybody else are junk, you have to be idiosyncratic. You have to take on idiosyncratic positions. And it's a rare person who can do that and not feel some discomfort. So I think that those two words, uncomfortably idiosyncratic, tell a huge part of the story. but you have to do it. And you have to, when Lehman goes under, you have to buy. You can't sell.